Welcome to the Trading with Venus podcast, where we help you establish strong trading habits, generate consistent profits, and create the lifestyle you desire for yourself and your family. Now your host, Raman Gill.
Welcome to another episode of the Trading with Venus podcast. I'm your host, Raman Gill. In this episode, we'll talk about the relationship between the stock market and the Forex market, as well as the relationship between commodities and the Forex market. A lot of times we want to trade technicals and do not pay attention to these other markets, but it is important that we understand these other markets so that we can become better traders in terms of trading Forex. You may have noticed recently that the markets have changed. Over the last few months, markets haven't been playing the way they used to. So if you've been trading for a bit, let's say a year or two, you would notice that before we used to get some nice trending moves and the markets would do certain things, they would flow in a certain way. And lately, that has been disrupted completely. So what has been going on? Well, the reason for that is because there's a lot more going on in the markets these days than we used to experience before. Not to say that before we didn't have any problems in the world, of course we did, but recently it seems like everybody is going hard left or hard right, and as a result of that, there's this commotion in the market that has made the market more volatile. So let's take a look at what's going on in the market currently. First thing is Brexit. So if you've been trading pound, you know that Brexit has caused a lot of heartache to a lot of people. This is because every single time they come close to any sort of agreement being agreed upon between EU and UK or being passed by the parliament there, everybody is happy about it, excited about it, and everybody starts to buy British pound. So when British pound gets bought, it starts to move up. And then what happens? There's no agreement. It doesn't get passed through the parliament or something else comes up. As a result of that, it's all doom and gloom all of a sudden and market starts to drop. So that's one thing, Brexit. We have to pay attention to what's going on with Brexit because every single time there is a comment that comes out in regards to Brexit, whether it's from Prime Minister Theresa May or somebody else, it will move the market. The next one is US. What's going on in the US? Since President Trump has been elected, we have seen more volatile markets. When he actually first got elected, markets dropped. Equity markets dropped because they did not know what to expect. But once he started talking about uplifting the markets or making some concessions for businesses, equity markets really like that. So we have seen that over his presidency so far, markets have gone up. And I mean the equity markets. However, he has created some headwinds for our Forex trading. Main reason for those headwinds is the US and China trade relations. So this is another thing that really has an impact on trading, especially Japanese yen. When we see that there are comments that come out in regards to US and China actually reaching an agreement, we see that Japanese yen goes down. When we hear comments where US and China are far apart in terms of reaching an agreement, we see that Japanese yen goes up. So we've been going between fear and greed and fear and greed in the market. So sometimes we have this risk-on environment where the equity markets are going up, Japanese yen is dropping, euro and pound are going up, so everything is good. And other times where we see when they are not far apart, which is risk-off environment, we see that Japanese yen will actually go up. So all the yen crosses will drop, euro will drop, pound will drop, and of course the equity markets go down. So this is the environment that we are in. There is nothing we can do about it. The only way to trade this environment successfully is to be aware of it and really pay attention to our news feeds. Back in the day, you didn't even know what newsfeed was and you didn't really care about it except for the major events that were coming out in the economic calendar. However, these days we have to look at the newsfeed and see what's going on hour upon hour if you are trading short term. So these type of moves, the risk on, risk off environment, creates this volatile market condition where things could move up one day and they could drop the next day. So we've had a lot of volatility in the market as a result of that. So if you really want to navigate these volatile market conditions, the best way to do that is to be aware of, first of all, what's going on in the market. What are the different plays that are happening at the moment? Who's talking to who? Who's not talking to who? And who is likely to put a comment? Fed is another one where we see before they were raising rates. Last year they were raising rates, so US dollar was up. Now they have actually sort of taken a stance back. They're not as excited about raising rates, and they're saying that there's weakness in the markets. They're concerned about US-China trade relations and so forth. So in order to navigate these markets, we really need to understand who are the different players that are making a fuss, and what kind of fuss are they making. So what are they saying, and what kind of comments drive the market up, and what kind of comments actually drive the market down. So those are some of the things we need to understand, and make sure you keep an eye on those news feeds so that we are able to figure out exactly what's going on and make sure we adjust our trading accordingly. The main thing that gets impacted in Forex market because of the equities is Japanese yen. And the reason Japanese yen gets impacted is because of this risk on, risk off environment. So what is this risk on, risk off environment? Risk on environment is where the investors are willing to take risk and they're willing to actually put money in the equities market so they can get a better return. Whereas risk off market is when investors are not willing to take risk. They're concerned about what's going on in the markets, so they take the money out of the equities and actually put it in a safe place. And the safe place is the bond market, or Japanese yen is another one that gets impacted by that. So you'll see the buying of bonds goes up as a result of this risk-off environment, and Japanese yen tends to benefit from it as well. Now, why does Japanese yen move as a result of this risk-off environment? This is because of what's called a carry trade. A carry trade is when the equities are doing well and all the yen crosses are actually going up. So when investors go into this risk-off environment where they do not want to take risk, they take the money out and put it in yen. And the reason for that is the carry trade that I just referred to. It means that first, they borrow the money in Japanese yen because they have negative interest rates. So investors will borrow the money in yen and they actually put this money into equities, into other places, and as a result of that, they're looking for higher returns. But when the risk-off environment sets in, they want to cash out of that and buy the Japanese yen back. And when everybody wants to convert into Japanese yen, because that's where they borrow the money from, it pushes Japanese yen higher. So when you see that equities are doing well, have a look at Japanese yen. You will see that yen crosses actually tend to do well as well. And that kind of environment is the risk-on environment. And when you see that your equities start selling off, so your S&P 500, DAX, your FTSE, then you want to look at what's going on with the yen crosses, because all of a sudden money starts to go into Japanese yen. People are buying the yen because they don't want to be in the equities, and you'll see the price of yen goes up because as more people buy yen, it's the demand and supply, and the yen goes up. So when yen goes up, that means yen crosses will go down. So euro yen will go down, pound yen will go down, Aussie yen will go down. So you have the unfolding of the carry trade. So that's the relationship between equities and Japanese yen. So Forex market and equities are very much related, and this can give us an opportunity to trade. So as you're doing your analysis every day, I recommend you take a look at some equities as well. And then you can talk to your stock trading friends and impress them with how much you know about equities. Just like we talked about the relationship between Forex market and equities, now let's take a look at commodities and Forex. A lot of times commodity traders are considered different than Forex traders because we as Forex traders may not really trade commodities. However, while we are trading Forex, it is important to understand what the commodities are doing as well. So what are the commodities? Commodities will be oil, gold, silver, copper, all of these are considered commodities. And the countries that export these are called commodity countries, or they are commodity currencies, the currencies that come from these countries. So what are our commodity currencies? We have Canadian dollar. Canada is a big exporter of oil, so Canadian dollar is a commodity currency. We have Australia and New Zealand, who supply us with gold, silver, copper, so they are also referred to as commodity countries or commodity currencies for Aussie dollar and New Zealand dollar. Now, if these currencies are related to what they export, so we have to focus on both of these. Now, how can you make your forex trading better by looking at these? Let me give you a few tips. One, gold. Australian dollar is directly impacted by what's going on in gold. If the price of gold goes up, you will also notice that Australian dollar will go up. So you can trade Australian dollar against other currencies. For example, you could take Aussie US dollar trade, or you can do Euro Aussie trade or Pound Aussie trade. These trades will work while gold is going up, because Australian dollar will be going up as well. So in case of Aussie dollar will likely go up when gold is going up. So you want to look at both of them when you trade that pair. Second one is Euro Aussie. So when gold is doing well, Australian dollar will go up, which means Euro Aussie will actually drop. So those two are inversely related, because Australian dollar goes up, Euro Aussie will actually drop. Same with Pound Aussie as well. When gold is going up, you will notice that Pound Aussie will actually drop, because Australian dollar is going up. And in this relationship, pound is the first base currency. That's why Pound Aussie will actually drop. In the same way, you can take a look at our New Zealand dollar. So New Zealand dollar, New Zealand pound, Euro New Zealand, Pound New Zealand, all of these pairs can be traded with gold and silver and copper. Now with Canada. Canada is an exporter of oil. So when oil price goes up, Canadian dollar goes up, which means dollar CAD will actually drop. So Canadian dollar is directly related with oil. As oil goes up, Canadian dollar goes up, and as oil drops, Canadian dollar will drop as well. And with dollar CAD trade, US dollar is the first base currency. That's why you will notice that US dollar will move in the opposite direction. So dollar CAD will actually drop as oil is going on. So that relationship is inverse. So this is how we can look at both of these commodities as well as forex markets, and as a result of having that full view of the market, we can actually choose better trades, because we can look for these relationships, and where we see that both of them are trending in the same direction, that's the trade that we want to take a look at. So that's it for today. I will see you next time.
If you want consistency in your trading, we invite you to join our daily market analysis calls, where we provide the levels to find the best entries and targets on an intraday basis. For a 1-week free trial, please visit www.tradingwithvenus.com. Thanks for joining us today. With much gratitude, your show host, Raman Gill.